Sorry, guys. I always forget something. Let me know if you can hear me on YouTube, please. Sorry, guys. I always forget something. Let me know if you can hear me on YouTube, please. Anyone? Sorry, guys. I always forget something. Let me know if you can hear me on YouTube. All right.
NQ stocks by NQ, 239 contracts.
All right.
NQ stocks by NQ, 239 contracts.
All right.
NQ
Risk disclosure statement. There is a risk of loss of trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies.
All right.
This risk can be substantial, and therefore investors should carefully consider the
NQ
financial risk of the
stocks
entire trading
sell
stocks, including futures, commodity futures, derivatives, options, forex, and cryptocurrencies. Websites and this website potentially investors should carefully consider the financial risk of the entire trading stocks, including stocks, including may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment and host Apple Senate Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41. Hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account holder is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results and all of which can adversely affect actual trading results.
This trade room and its webinars are not intended to mirror my trades or to give specific trade recommendations. The analysis and setup I share trades and potential trades that I'm taking for myself based on my personal analysis. The goal of this room is to teach traders how to identify specific areas to trade within edge for themselves, but ultimately the decision is yours. Trading is extremely risky, and if you do decide to follow my personal trades, you do so at your own risk and can potentially lose your entire account and even more. I'm not always profitable and have routine drawdowns on my trading accounts. The spreadsheet you have access to is my personal spreadsheet that I use to enter zone values and ATR values that help me pinpoint exact prices for my trades. You can see when I enter zone prices into the master spreadsheet as well as the prices to enter trades whether you want to go long or short. You have the ability to copy the spreadsheet and enter in your own values and use mine to confirm zone prices until you're able to draw the zones correctly yourself. The spreadsheet is not telling you which direction to trade as it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade. Alrighty. Usual scrambling around trying to get everything set up here with this YouTube software and remembering to set up Discord as well. So hopefully everyone can hear me. Sorry for the echo right when I started. And of course, right when I start playing this, something finally fires off in these equities. There's been literally nothing until right now. Also on YouTube, I have my internal volume turned down. That is what's been drowning me out lately. So if it's still too loud, let me know. Overall, if you can't hear me over the alerts, let me know on YouTube, please. All right, so this just fired off on NASDAQ. We had a pretty large stop run here, especially considering it's the first setup in any of these markets today, equity markets anyway. So we will draw this zone and see where we're at and trade it. So again, when you're drawing these zones, you know, we're drawing this spike, and we have certain thresholds for each market that are trade worthy.
Nat gas ice iceberg buy NG 152 contracts. NQ ice iceberg sell NQ 151 contracts.
So in NASDAQ, it's 150. So anything over 150, I am drawing zones and I'm potentially trading off of. So there's a 240 lot stop run there, and then I just heard something else. So there's some sell ice here too. Let's see where that's at. I got about 225. So I always divert to the most recent setup. So let's draw this first, and then we'll see what's going on here. This is almost a double whammy as well. So double whammy are buy stop orders into the waiting hands of the big money, which are the icebergs. So stop runs are usually the retail trader, which I call the dumb money. No offense, I'm a retail trader myself, but the big money is the smart money, and they're the smart money because they can push the market around, not because they're all knowing. But sometimes they are, as far as getting information before everybody else, as we see basically all the time in these markets. We'll go over some of those instances here in a little bit. Alright, let's change this color first. So I like to color, actually this is pretty close to a double whammy, so we'll color double whammy dark blue. And
Bank of
see
England's
where we're
bill
at.
says, I do not expect discontinuity in household spending as homeowners refinance fixed rate mortgages this year.
And we'll go over the bigger picture stuff too. It's just literally there was nothing going on, so I thought I'd go over a bigger picture, and then the minute I start the webinar, everything starts firing off. So, all right, that looks accurate. So, in my trade room, my live trade room that I have going, we have this spreadsheet that we're using to enter zone prices, and it tells us based on the average true range, current average true range, exactly where to enter and exit these trades. So you can see the top of the zone is 13,105, the bottom is 13,099. So we will put those zone prices in. And then we want the current ATR, very, very, very important that you're adapting to the current volatility. I preach to you guys every week. Those of you using static stops, whenever you place an order, no matter what the volatility is, no matter what the ATR is you're just setting yourself up for failure because you're not adapting to the current volatility, which is the most important part of these markets next to these volume events. So, all right, so let's just look where we're at on the bigger picture, and then we'll see what trading strategies are in play that we're currently trading within the trade room. Where's my drawer? Alright, so you can see this is just smack dab in the middle of this balance area, right? So, I mean, you can possibly consider this a failed breakdown. Yesterday, it did poke its head below this important zone, below this balance area, and then recovered. So, this is the high volume node. This is a pretty important area right now as far as this could possibly be a failed breakdown. When you get failed breakdowns, that's when you usually get the monster move the other way. But as far as great trading areas, so I have these zones we call inflection zones in my room. We have specific trades that we look for in these zones as well, and these are just prior volume events that happen, or not volume event, prior based on the bar charts, inflection zones where important things happen. So there's 4 important areas of charting. You have tops and bottoms of balance areas. You have directional conviction. You have selling tails and buying tails. That's instant rejection. There's not a lot on this chart actually. There's a buying tail down here, but those are the 4 areas. So I draw these zones, and this is going back to stuff from back here, but you can see it's still relevant, right? So this current balance area, this was a gap down, which is considered directional conviction. You had directional conviction again. It held here as well. And then on the downside, you had buying tail, directional conviction, a couple little tails, another buying tail. So these zones, and then over here you had a gap up as well. So these zones actually perfectly fit the top and bottom of this balance area. So it's another area that why these zones are important. So the best trades are waiting for these particular zones. And again, we have specific strategies that we trade. You can see here, these are the ones we're working on now. I've got about 40 in the back burner, but these are the ones that, you know, these are all in my head. All my playbooks are in my head, but it's done me well to get them on paper. And we've assigned specific Apex accounts. We'll get an Apex a little later, where I can track the data for each one of these strategies. This is the most common one. This is just a BARF, meaning it's just, I try to make funny names for them, memorable names for them as well, but BARF stands for blind, the acronym blind ATR retest failure. So
S&P Ice Iceberg by ES, 708
now we
contracts.
got something in ES too. So a BARF is just, so right now all I'm really considering on this current volume event is a BARF, because there's really nothing else going on here. So we look at our where we're at on the bar chart, and then to figure out the important trading areas. There's something wrong with natural gas here too, by the way. We'll come back to this. I really want these to populate, because natural gas is about to get smoked, in my opinion, and I don't want to miss it. So anyway, these are the Ludwig levels. So we do have specific strategies when we get to the major lugs. We call them short for Ludwig levels. The red and the blue. Red is resistance, blue is support. So this is pretty close. This is actually, this looks like a couple different strategies here. If we can get a stop run in NASDAQ up into this lug, you can see this delta divergence as well, cumulative delta. This is just showing you who the aggressor is in the market, who's taking more offers or hitting more bids. So you can see as this market makes a high, this is not making a high as far as the aggressiveness of buyers. So that just is telling me that there's more sellers. I don't like the term more buyers and more sellers, because there's always someone on the other side to take the trade, or there would be an air pocket, right? So just meaning who the aggressor is. So this is already telling you something. As this moves higher, they're hitting bids more than they're taking offers, and that's all this is showing you. I mean, it's at pretty much zero right now, but this is a little telling. And then you got a couple other factors here where this may fail up here, and hopefully we'll get a couple setups here. So you got red lug, you got baby lug, you got extreme standard deviation of VWAP. All of those are areas where this could snap back. And then you also have the top of this market profile composite where we're at right now. So a lot of this stuff is pointing to potential resistance. If it breaks out of this, then that's giving you information as well. If we draw new lugs, so on and so forth. So based on where we are on the bar chart, I would put the odds that this fails, but as of right now, this, unless something new came in here, you get a couple stop runs. This current volume event is a bullish volume event now. And how do I know that? Because of watching about 10 million of these over the last 4 years. I've determined how the market reacts out of the zone as far as an ATR. If it's able to push an ATR out of that zone, either way, it tells me if it's bullish or bearish. So you can just, this is all on the spreadsheet that I use in my trade room that all the members get access to, right? So if you can see this ATR validation price right here. So if the market, the NQ touched 13,125, this is a bullish setup, and you can see this is touched got through 125. So the normal pattern, we actually have a trade for this as well called the reversion trade, where we play reversions back to the volume event. But as far as I'm not taking reversion trades on these webinars. It's just too hard for me to follow all the trading strategies in the reversion trade. So the reversion trade, again, is part of the spreadsheet too, and it's more of a scalp type trade where if you need to be active, this is the trade for you. But again, all the values are in here, but I'm not taking those trades. So just an example right now, if you were to get in this reversion trade, you'd be getting in at 23. Your exit would be at 47.25, and you're just literally playing to the back of the top of that zone, 13,107. So you would literally be in right about here, and you're playing for a move back, and then you're out. So it's very scalpish. I don't like scalping term anymore, which should tell you something right there, because that's where I made all my money trading back in the day. And what I tell you guys all the time is, if I'm not doing it, there's probably a reason. If I can make money scalping, I would be scalping. So I have yet to find someone that is to this day still trading by hand, clicking the mouse, and can make money consistently scalping, for just a few points every day consistently. in my opinion, it's not possible, and that's why you have to adapt as a trader. When things stop working, you have to learn to adapt your system. And I was out of the game for a few years. I hung on for
Just taking a look
I
at
made
the Green
millions and
Grid
millions of
Index,
dollars between
63 out of 100, signaling greed,
2001 and
and the Crypto Green
2005,
Grid
and
Index,
then
61 out of
late
100,
2005,
also
2006,
signaling
it
greed.
just stopped working, and it was basically because algorithms started to take hold in the market and low volatility and so on and so forth. And then I couldn't make money anymore. It was literally overnight. So then I spent years trying to come up with a new way of trading that was longer term, that I can compete and be an elite trader, and it just was not happening. So I had to leave the business in 2013, and I was literally just in medical sales because I couldn't make money anymore. And Dr. Brett Steenberger, probably the top trading psychologist on this planet, he was actually at my trading firm when I was making the millions, and he watched me trade, put me in his book, so on and so forth. But he called me and said, hey, you may want to take a look at this Bookmap software. It kind of reminds me of the way you used to view the markets. So the minute I saw this, and this was way before all this stuff, it was just this visual, and I'm like, I'm back. This is exactly what I need to be able to compete in these markets. So I got back in originally to trade stocks, and then I was jaded by the futures because I had made so much money in them, and then I couldn't make a dollar, so I wasn't going to trade futures. And then started using Bookmap to trade stocks, and then they came out with the SI indicator, and then I flipped back to futures once I saw how powerful this thing was. So that's a quick synopsis. I'm sure most of you have heard it all before, but you got to remember on these webinars, there's a lot of new traders that haven't heard the stories or the concepts behind what we're doing here. So in these webinars, you gotta bear with me as far as hearing it. Again, I literally had one email tell me, someone wrote to me, he's like, I like your style, but could you please stop telling me how you made millions of dollars back in the day? It's like, well, I'm just telling you my story. It's not like I'm bragging. I'm trading, micros right now, things like that. So it's like, my story should resonate with all of you guys to show you that, one, about the resiliency, and then also, even when I was making millions of dollars, I started trading one lots, right? And I built it up.
Just at the Bank of England inflation forecast
Should
at the
be,
2-year horizon,
there's so many
assumes
traders
linear
out there
response
that
to large shocks.
were making money back then that were out of the game, and they just never able to make a comeback. It should be, again, it should resonate with you and give you excitement that it's possible to get back in this game. And what I'm showing you here each week is the strongest edge I have ever seen in futures trading. So I have, and it's not me bragging about anything. I'm telling you my story, and it is what it is. I made millions of dollars, and I couldn't make a dollar. That's not bragging, but I like to tell my story because it should give you guys confidence that you can do the same thing. All right, so this is the most recent zone in ES 39 to 37.50. So we'll put that zone in. It's already obviously a bullish setup as well, because it ripped away from that zone. And 37.50. Current ATR, again, second most important thing you put in this spreadsheet besides the zone prices. All right, so this tells me if this market got to 43.50, this is a bullish setup. So this obviously got to 43.50. It's there right now. Went a little higher. So I already know, and this is the stuff you guys need to be doing pre-market. You got to know exactly where you're at on these charts, so you're not scrambling to figure out, are we in an important zone? Are we at a lug? Where are we at, right? I already know that this market is basically in the middle of nowhere, right? So this did come down a couple times yesterday. This is the high volume node of that guy, and this zone is pretty much right where that is, because that's where you put in yesterday buying tail, and it closed here and gapped up to here today. So this is an important, still a decent zone to trade off of it if on a retest, but this is also right where that high volume node is. So I like that zone there. But as far as where we're at here, you can make a bigger balance area now too. This is just basically in the middle of this balance area, right? It's just, this is where trade is the most choppy. So, patient traders that can sit here and wait and don't feel like they have to be in on every single move of the market, which is usually a recipe for disaster. If you just wait for these important areas to trade, you would be just doing that alone. You would be a profitable trader. Then when you can add in these real-time volume events in these areas, and that's what the SI indicator shows you, then you can be an incredible elite trader. So that's, with the best edge out there. So that's exactly what we do, what I do, what we do in the room. So this is already looking like we're going to do the usual. And members of my trade room that took the 1 ATR trade here, that looks like it's heading right back there. So I do know, no matter what, we do have the BARF trade. That is the most active trade that you can take, that we can take in my room and that I take, where you get a blind. It's just an ATR retest failure, go long, right? So I have different strategies that we look for, right? So if you want to be active, BARF is your trade. When we come up with these stats over the next, I'd say 6 month mark would be a really good. I started doing this March or February 6th. I do have some of the stats in here, so let's see. Actually, I'll get back to this in a little bit, but at about the 6 month mark, we should have pretty accurate stats. So my guess is, so as of right now, this is the most profitable. The Ludwig level, a stop run into the Ludwig levels, which makes sense because those things are so powerful on their own. Then when you add in a volume event, it makes it more powerful. Liquidity trade is just waiting for a volume event, ATR retest, and we're trying to head up to the liquidity or down the liquidity. We talk about that every week too, how the liquidity, long-term liquidity in here is like magnets. Inflection zone, that's what we've been talking about. Trades, Dumb and Dumber, that's where we make it here in NASDAQ. Hopefully if we get a stop run here shortly, we'll go over that one. But this is the most active. So when all is said and done, I'd say this one's probably going to be 65%. I would say this one's probably 60%. I would say this one's probably, I'd say 62%. This one's probably, I'd say closer to 70%, and I would say this one's maybe 55%, right? So you can be
so
a
now to get the
40,
EIA natural gas
40,
change
50%
forecast
trader and still
27
make money
BCF on a
you
price of
take
minus
trades. You're
23
getting
BCF.
bigger reward than your risk, obviously, right?
Gold
So-
stocks LGC 167 contracts.
So that's my guess of those. So the way these, you can't misinterpret what that means. I've been talking to my room about that lately too, because I've been getting questions. Well, when you put on a trade, and by the way, we're at the red lug here in NASDAQ. Actually, let's see what happened here. Did this retest this zone? Yeah. So what I'm doing right now in my room is I'm trying to take as many variables out of the equation for these trades, right? So, this trade is literally just blind. You get a volume event, you get an ATR retest failure, you take the trade, or the other way. That's it. I'm not taking anything else into consideration right now because I'm trying to show my room. If you just do these volume events on their own, without any other inputs, you could be a profitable trader, right? But that doesn't mean that, like right here, where as you understand those trading setups and you get better at them and you understand what's going on, you can say, hey, here's a bar setup, but you know what? I'm going long right into the red lug. Yeah, no thanks. I don't want to take that trade. And you put that in your playbook. That's absolutely fine. And that's what I will do eventually, but I just am trying to show that if you take them all, that it's just, we talk about this all the time, just like a casino, taking every bet that comes at them because they know the math's in their favor. Well, if you take every one of these bars, no matter where we're at, the math's in your favor because this is an edge, right? So, but you could tighten up your edge even more by not trading into the lugs, things like that. You see what I'm saying? So the whole goal is for you, or for my trade room and you, hopefully, that you master these by themselves, and then you can start, just with the basic rules that we have for them, and then you start adding in, other important things. Like, so along here right now is not a good trade in my opinion, right? Obviously, you got the red lug. We've already talked about this. Extreme standard deviation. You're at the top of market profile composite. I'll still take this BARF, but, I would not recommend the long because I'm taking every BARF that I see. Do you see the difference? So, if you are mirroring my trades, which you should not be, you should be learning this stuff for yourself. This is not going to be a good long if I go long this trade, but I'm going to take it because just like a casino can't decide, right? And we go over the trading in the zone document basically every week here, right? This is directly out of trading in the zone, right? You just need to continue to put on the trade, just like they continue to take hands. Sometimes they get someone that's hot that rings them up for $1 million or whatever, but they know over the long run. We'll get back to that later if it's slow. It seems like it's going to be slow today. The long run, they know they'll be profitable because they have an edge.
China's
so
Ministry
the
of
point is,
Foreign
I'm just going to
Affairs,
keep taking
China and
these
Russia
barfs
to explore
regardless of
free
where we're
trade
at, just to show you
feasibility.
that the edge is in the volume event, right? So if that happens, I will go long there. But like I said, I would not recommend a long right here until we can at least bust through here and make some new lugs, if you're marrying me. So anyway, it hasn't even happened yet, so I'm waiting for a retest of the zone. It has not happened, so we're waiting for that. I'm waiting for a retest of this zone NES, and I will go long this market as well. Let's see where we are on the lugs, see if it looks a little better as far as me being afraid to put on the long. Not afraid, I'll still do it, but there's just some trades where you're like, this does not feel good. But sometimes you'd be surprised what happens. All right, so this is pretty much looking like the same thing. It's not near the lug, but you got extreme standard deviation. You got close to the top of this market profile composite. So these are all areas where this can
1 minute
definitely
remaining.
fail. So now we just wait and see what's going to happen here. The trade's been absolutely terrible the last week, last few days especially. I thought after CPI and the Fed minutes yesterday that things would start opening up, and it's still pretty bad. All right, so as we wait for something to happen there. So I could potentially take liquidity traded here as well. It's not, you got to use some judgment. So the liquidity trade, LICK we call it, right, is you get the volume event, ATR retest failure, and you're playing
10
for
seconds.
the liquidity. Well, you got to use some judgment. First of all, that hasn't retested yet, but say I'm getting in, my entry point, I'll tell you exactly where that would be. So based on this spreadsheet,
25
if I
BCF,
do
25
along this on a
BCF. That's
retest
drawn
failure,
forecast of
I'll be
27
going
BCF.
long at 28. My stop's going to be 76. So I'm basically risking 50 points right here, 52 points of risk, right? This does not matter. As far as, you don't take, I'll take the trade. I don't care if it's 100. It's all based on your ATR, right? If the trade's 100 ticks of risk, I'll still take the trade. You just have to cut down your size, right? And yes, when you put on trades, you want to potentially have at least a 2-to-1 risk reward, which I agree with, but I don't agree with you just put on trades and, so say we had a setup down here, right? Let me clear this out. And I get long, and I say, okay, I'm risking 20 ES points, and to the top of this, and say the red lug's right here too, or just say it is where it is. Okay, well, am I putting on a trade risking 20 points to make 10? Is that a good trade? No, but I don't put on a trade and say, okay, I'm in this trade, I've got to make 3-to-1, and I just hold it and I ignore all these important areas as it gets to these important areas, right? That makes no sense to me. Where I demand 3-to-1 on my trade, so
We have
I'm just
also
going to
got
sit
the
in this
weekly
thing.
natural gas storage
I
report on the news
will
feed
hold
for
a
those that
portion
are
of it
interested.
at all times for the bigger move, which is usually a move to the lug and or opposing a volume event. But I will get out of the trade. So say again, I get long here, and I say it's only 10 points in my favor. Remember, I'm risking 20 points on the trade. Well, when we get to the top of this market profile composite, if it struggles, I'm getting out of a few of those contracts. Even though it didn't go 3-to-1, say it was only 0.7-to-1, I'm still getting out of a couple there. I'm paying myself as I'm right. And that's one of the things he harps on in Mark Douglas in the Trading in the Zone book, where he talks about, and this is number 5, I pay myself as the market makes money available to me, right? And these are my personal areas that I get out that I deem important.
Natural gas stays low
from
after
my
the
experience
EIA
of trading
storage
all these
data
years.
down to
Level
4%.
levels, market profile composite, highs, lows, points of control that we just talked about. VWAP, extreme standard deviation.
NQ iceberg by NQ, 152 contracts.
Set up an NQ. Spot gamma levels, struggle to get through having the risk and liquidity. So I watch all of these, and I watch the market if I have positions on. That's why you want to have multiple contracts on, and then trade micros if you have to. You don't want to just trade a one lot NES because you're done if you're out, right? If you're trading the micros, you can put on 10 micros. You can be out of a third at important areas, right? So I would get out of a third here if it struggles. Then if it busts through there, I get out of another. I usually get out of all of them at the red lug. Or if you get up to extreme standard deviation, say it's three or four standard deviation free whip, you can get out of another third and then leave a third on for the bigger move, and that's what I usually do. So I will get out in important areas, and then I'll leave a part on to try to get to the red lug, which is a lot of times quite far away, which would be your 2, 3, 4 to 1. See what I'm saying? So I fully understand risk reward in R's and everything else, but I do not agree with you just put on a trade and you don't get out till it goes 3 to 1. So, pay yourself as you're right. All right, let's see what just happened. Hey, what do you know? I can't believe you guys ever see this pattern. I say this every single day in my room, by the way, because it happens in every market all day long. It's just uncanny. Here's your ATR. Here's your retest. Now we'll go long this. So what I can do here, I'm going to go long off of that first setup, but there is a new setup here. And remember I said I do divert to the most recent setup, but I'm still going to take this long off of here, off of the first event, which I'm a little scared to into the lug, but again, I'm taking the barf trades blindly. Let's just make sure this is right. ATR is up to 21.554. So I will go long at 29.75. Everything's in here, right? I will stop at 74 quarter, and I can put on 4.5 MNQ. Micro, obviously, you can't trade in half, so I will round up to 5. So this just takes all the thought out of it, or all the conflict. Like, oh, I don't know, what do here are my prices. I get long there, I stop out there, I put the trade on, and I let the odds work in my favor. I gotta hurry up and get this trade on before it runs away. Hold on. So we're not, I'm not doing it in my room anymore either, or in Bookmap. We're not doing these webinars where I'm actually showing the clicking of the trades. It's just, for compliance reasons. But you guys see what I'm doing, and I'm talking you through it. So, again, if you disagree with this trade, then fade me. All right. So I just got long at 29.75. You heard that. Again, this is not the best trade area, but I'm putting on barfs. That's why it's called a blind ATR retest failure. I don't take anything else into account. So that's just one strategy that I'm taking. So I just took that trade. So I'm long 5 MNQ. And it would not surprise us to see this struggle here, right? And we'll draw this zone too, and I'll show you a little alternative to how you can. So my original stop off this first setup that we've been talking about was, again, 74 quarters. So I'll put that in right now. Then I'm going to show you a little. I don't want to confuse people, but I'm going to show you how you can now trail the stop. And I'm not going to trail my stop because I, want to break even, so on and so forth, even though this hasn't moved at all. So here's your newest volume event. 177 buy ice. We already know this first zone was buy ice, and now here's another zone of buy ice, right? So now we figure out where this started. Right, so this, you can see where this spiked up. So get your crosshair and just go to where it started to spike right there. So the price that volume event started was right about here, right around 675. So we come in here, draw the bottom of the zone. I'm going to change colors so I don't confuse myself. Make that blue-ish. Now we follow all the prices that happen in the spike to draw the other side of the zone. I may have to adjust the bottom of the zone too, depending on what happened with prices as the spike continued. You see the spike of these buy stops still coming in, still coming in, still coming in. Come on. Came down here again. So the top of that zone was the highest price in the spike, which was right here, right around 1250. Not right around, that's where it was. There you go. That's your zone. So that should clear up. There's just so much, even in my room, like people are struggling drawing zones. You just want to incorporate all the prices that happen in this spike, right? So we got 112.50 to 675. So now watch what I can do. I'm still long off of that first setup, right? But now I put in my new zone prices, 13, 112.50. of the zone is 0675. That's not right. 10675. Make sure your ATR is correct. It's down to 20.93. All right, so now my stop, I can move it to 82.75 based on this new volume event. It's not a huge difference. Sometimes it's 50 points. This one's only 7 points difference, but because I'm trailing off the newest volume event. Why am I doing that? Because this market should not get below more than an ATR below that current volume event. If it does, this trade is not valid. And just from watching, you know, I'm sure people are saying, well, how do you know that? Well, because I've watched literally, I don't even know, thousands and thousands of these. So I know if this market comes back and is able to get an 8, God, this mouse sucks with this YouTube software. If it's able to get an ATR below this zone, that is not what you want to see for a bullish setup, and it's very likely to sell off, right? So that's where I get out. So that would be an ATR plus 15% below that zone, and that's where I will get out. So this is, and then this looks like this was another 1 ATR reversion trade. So again, whoever's taking these 1 ATRs in my room is killing it. So this one you would have been short at 31.25. I mean, it was literally to the exact tick. Again. So we already saw the first one worked, right? And now this one with this new event, here we go, 31.25, pretty much to the, I think he had 2 ticks of heat, and it's coming right back to the zone. So that's why we take that trade. So hopefully my room is doing very well with that trade today. I showed you guys
I must believe this is, I don't think
he's
there is a
absolutely
banking crisis
killing
and
it.
there are vulnerabilities.
I mean killing it, and he's just, you know, he had a bigger account. He started with like 100 grand, so he put it in here, and this is exactly what he does, right? And this is what this is for. You put your account size in. He's risking, I think he's only risking 2%, which if you're trading real money, you only want to be risking about 1.5%, 2%. So each trade he was risking $2,500. So right now he'd have on, if he's doing these, and I'm sure he is today, he'd have on he can put on 5 contracts. He's risking $2,500 of risk for that account size, right? It doesn't matter if you're trading $10,000, then you're risking $250, and you could put on 5 MNQ. You can't even put on a full contract, a normal contract. So this all adjusts based on
NQ Ice Iceberg by NQ 151 contracts. S&P Ice Iceberg sell ES 701 contracts.
I must
So you can
believe
see
this
why I
is
said I
economy
wouldn't
is
recommend
slowing
taking
down,
it
which
long.
will
I'm
lead to
doing
the
my
Fed to
barf trade like I
recalibrate
always
their
do
own
without,
policies.
emotion. But you can see how powerful these Ludwig levels are. They are literally insane. It's the second most powerful thing I've ever seen in futures trading, right? So this bounced off of these. I mean, I could show you example after example after example after example of these things. The big, she calls them big red and big blue, right? So again, I always get questions. What's the name of that? Ludwig level? It's ludwiglevel.com. Right here. Let's find it. So go in here. I know her website looks like it's from 1980. She does not care. She said it does what it needs to do. Put your names, put in the comments. If it's for, you can try it out for 3 days. So you saw the Bookmap webinar, you get special pricing, right? So try them out. You will not be, like today they were down for a little bit. She's out of town and she didn't reset the server or whatever. And the whole room was like falling apart. Like, I didn't realize how much I really need these lugs. I mean, they are incredible. They're incredible for trade entry, and they're also incredible for targets, right? So we've seen many times where, you know, you could say, you can literally open up your computer like right now and say, we're at the real lug, I'm going to short, and then I'm just going to I'm going to stop myself out like an ATR above the lug, and I'm going to see if we can get to the blue lug by the end of the day. I'm going to go golfing. You know, come back so many times and it'll be at the blue lug. It's nutty. It's really nutty. So anyway, like I said, this is not a good place to go long, but I'm following my rules for that specific trade setup. This is very likely to fail here, and it's already failing, so we'll see. I know that sounds like ridiculous, like people are like, what are you talking about? You don't want to be long, but you want long. Because the whole point of this exercise I'm doing with my room is to show you just take them all, because you don't know which one is going to blow. It doesn't mean that the lugs, you know, it builds new lugs all the time. Does it mean the market can't rip through that area? Absolutely not. Is it, you know, percentage-wise, is it likely? It's more likely to fail. But I just put on the trade no matter where we're at for the BARF for that particular exact setup, just to show you do it enough, You don't one time not do it, say, oh, I'm afraid. The next time you do it, oh, I'm going to trade triple size here. You just consistently put this on. It will be a winning trade after a series of trades because the edge is inherent in the volume event, right? I know I keep saying the same thing, but I know there's people out there like, what's this guy talking about? He says this is not a good place to go long, and he's long. All right, so this volume event is basically in the same exact area, so I'm not going to do anything differently here. But what we did get here again, so this is number 2 ATR reversion network in NQ. What I could do is add to this trade. I'm not adding to it. I already have one barf on just because of everything I just talked about. But if I had a very bullish sentiment right here, I could trade that barf as well off this new volume event, right? All right, with the NASDAQ, let's see what's going on. And he asked, hey, wow, I can't believe that did the same thing. I just laugh every day. Like, we have a specific strategy for this exact thing, and it still amazes me how often it does it. So anyway, here's your ATR, here's your retest. We actually do have a new volume event, so I'm going to do the exact same thing I did with NQ, where I can trade off of this original volume event, this buy ice that came in here, and then I can draw this new zone and potentially trail my stop. So let's go over the spreadsheet. Let's just make sure I think I put these prices in. Can't remember 5 minutes ago. Yeah, I did. I remember that. All right, 4.69 is your current ATR. So this current set, or the prior setup, I could go long at 44.50. I stop out at 32. I can put on 8 MES based on my risk. This is my apex risk. I would not be risking 10% of your account size if you're trading real money. Apex, you can be a little more aggressive. We'll go into the apex stuff in a little bit. It's a great way to practice, work on your trading, and if you do well, then you're funded. I fully believe in that company, or I would not promote it and be using it, right? So I know they are coming out of the woodwork now. These trade, you like on Facebook, if you like anything trade, like if you hit the like button on anything trading, you'll get 45 trading funding things coming at you. Like, it's unbelievable. It's actually a great, like, talk about it all the time. It's a great business model because 95% of traders fail, right? And they're just milking people for their fees to do these tryouts. This company actually wants to fund traders, right? And that's what I've gone through a couple of them back. Remember I told you I was struggling in 2013. I was on my own. I was trying to, not trade my own money because it's a whole different ballgame mentally when you're trading your own money versus somebody else's. So I tried one of them. It was the only one around back then. I'm not going to name names, but it was the same. It was they had no interest in really funding traders. At the time, they just wanted to milk people out of their money, and then you qualify. Okay, well now you got to do the live qualifier. Qualify on that. Okay, now you got to do the secret, double secret squirrel qualifier. In these conditions, and there's like 3 or 4 things. It's just like, this is a bunch of nonsense. You guys do not want to fund real traders. So I was always very wary of them. And then somebody came to me, it was over a year ago now. I've been using it for over a year, and this is it again. This stuff's on my website. I know I go over this every week, guys, but there are new traders in here. If you go to my website, there's discounts for everything on here. I do have to get the Lugwood Levels banner on here, but you got if you Bookmap, you got discounts to that. Here's your Apex. You can click on that.
Gold Stops LGC 157 contracts.
Code, you get 50%, or it's actually 80% off right now. They got the thing, and then here are the trial things. But anyway, I did this, right, and I just did it to prove that they were legit. Told my room about it, said I'm doing this, and I qualified. Blew out a couple times. So you got to be careful because if you have a trailing drawdown,
Gold Stops LGC 176 contracts.
You can still be profitable and blow out of the account. So it actually teaches you some discipline too. But you got to make 9,000 before, if you're doing this one, so if you do the smaller one, you got to make 3,000 before you lose 2,500. So great way to work on your trading. You do still have skin in the game. Where if you do lose, there's so many traders out there like, well, I can't do a simulator because that's not real to me. Well, if you're wrong on there, you still have to re-ante money, and it still hurts to have to put up your credit card and pay for another combine. So, and like I said, you can practice for a fraction of the cost of actually losing real money. This is where I got on this tangent about this risk parameter, but you can risk more on the Apex. I lost my train of thought, but I'll get back to it. Let me put this order in first. So I'm going to go long, yes. I know I'm all over the place right now, guys. I don't know why. It's not like the markets are doing anything. All right, 44.50. What I was going to say is, so you can, practice. You're talking about practice. for a fraction of the cost, and then if you do well, then you're funded. Then you have there was one guy yesterday said, I did in my trade room. There's a bunch of guys that have a bunch of different accounts because you can do multiple accounts with them. The one guy's like, I put $35 up, I got funded, and now I'm up $6,000. So he basically risked $35 to make $6,000. That's pretty good risk reward return. All right. So I'm waiting for now. So I don't get in. So I talk about this every webinar too, right? So this is the, I gotta draw this new zone too. This is the science. There's no disputing there was buy ice here, there was sell ice here, stop run, so on and so forth. How you trade these zones is the art, right? This is my art. This is from watching thousands and thousands of these. I have figured out the best way to trade these, right? So meaning you could say, hey, I want to get long here. Okay, I do like your idea of ATR. Here's the retest. I'm getting in right when it comes back to the zone. Can you do that? Absolutely. But I've learned from experience the best way to go long is to wait for it to move again back out of the zone, show that it can push more than an ATR out of the zone, and then I get long. Yeah, I might cost myself points. Yeah, but it's better than watching this and then that, right? And again, I used to get in, even in my original course, which is still very relevant, and I'm real close to getting my new course done. Tell you guys that every week, but it's going to be fabulous, so don't worry about it. It's going to be more of a immersive training. We're actually being trained instead of just a video of me talking about these volume events. It's going to be awesome. That's why it's taking so long. But anyway, in my old course, I would be like, because this is when I was first learning this stuff, and I was watching it for 6 months, and I'm like, okay, I was trading off of it, and I was working. I would be like, okay, you get in the minute it breaks out of the zone and you put your stop right below. That still works, but it's not as effective as waiting for what I wait for now, and that's just all from experience. Remember I talked about at the beginning of the webinar about adapting. You have to adapt when you're trading. So yeah, that stuff, when I learned it, it was working, and then I would trade it, and it's still an edge the way I was trading it out of my original course. But I've learned over the years now, because it's been 2+ years since I put out that course, that the best way to trade these is to wait for this to move back out of the zone. If you want to get in right on a retest, be my guest. That you can trade these however you want. There's no disputing what this stuff is. So let's just put this in real quick, and then I'm going to trail my stop. So if I get filled, I'm in at 44.50. My stop will be at 32, right, off of this original buy ice event, the blue zone. But now this came in, this newest event, and you had 1,600 sell ice, which is more than double threshold, so that's very relevant, especially on a day like today when there's nothing going on. It's a complete chop fest. So remember, find where this spike started, find your price. It's right there. You may have to adjust it, and it's already adjusting a little bit, right? So you're better off just putting your zones in right away like this, and then you can adjust them with the hotkeys. These do have hotkeys, because you have to get out of edit mode to scroll the chart over to see all the prices, and it's just a huge pain in the ass. But you got to do what you got to do with these drawing tools right now. Eventually they'll come out with better ones, but this is what they have. So my point is, like, just get your lines up there, because now I got to get out of the edit mode to be able to move my chart around. Now I can see, okay, yeah, it actually came down to here on the downside. Remember, I'm following that spike, following the spike, following the spike, came all the way up to here, right? So I'm going to move this one down. So I have my hotkeys set up, so I can go right into edit mode and pull this down. That's that one. It's basically the exact top of the other zone. And then this one I can pull down. So now that shows you this zone here. Right? All right, so now what I'm going to do, let's see where we're at. This market's terrible, by the way. 41.41, 41.39 is your new zone. So now what my stop's going to change a little bit, and I can trail my stop based on this new event, right? So my original stop was at 32. It's not going to change a ton, but it's going to change. 41, 41, 41, 39. Now my stop's at 33.50. So it's a 1.5. It's nothing. Sometimes it's 10 points. All right, I just got filled. Let's see. Yeah, so I just got filled. So what I did was, again, I got long off that first setup. Why will that change colors? You had ATR, retest. Here's finally the failure. And I put my stop based on this newest event. So I had my stop based off at the bottom of that zone. Now I moved it up the bottom of that zone. See how that works? And all of that's in the spreadsheet. And please don't email me asking for the spreadsheet. It's part of my trade room. You come to my trade room, you get access to the spreadsheet. This thing is an absolute godsend. It is incredible. Guys in my room helped me build this out. You know, I originally had it just for position trading, but then they built it out for the ATR trade. It's awesome. All you got to do is put in your zone prices, put in your ATR, and everything's right in front of you, whether you want to go long or short. All right, so long both of these. It should be interesting. Actually, I think I turned off. Now we got to get the waterboarding going. Let's get tick strike going. This is another thing that is a must. I laugh about it all the time, but I have to have it in my trading because I want to know what's going on. One, in the major stocks that drive these futures, right? And then also, if something's firing off in other markets, I know, right? So if something starts firing off in NG, I can hear it firing off. So that's why I've been using tick strike for about 13 years now. And once again, there's all this, everything I use, there are discounts on my website. And this is one of the most important things too. We'll get into that, hopefully. All right, so you can see this, both these markets are respecting these volume events. So I'm already long NASDAQ as I call it sometimes. Probably don't want to call it names until it screws me over today, and I'm long ES, and this is the pattern. I could go long potentially again if I had a bullish. So that we talk about thesis all the time in my room, right? So you come up with a thesis on what's going on. Like I am not bullish or bearish here. I mean, like I don't have a strong conviction. Like this is the middle of nowhere, like we talked about. But if I had a very bullish conviction, well, what I can do, I think I did this on a few webinars ago, and I got burned because the Fed came out and did a tape bomb on me. But anyway, if I love where we were on the charts, I could take another barf long at least on that volume event as well, right? So I just have one on. We'll let those go. This, I just followed my rules. I have this exact trade. I have the rules for this trade. Again, these trades are more detailed as part of my trade room, right? So the guys pay to be in the trade room, so they get more access to stuff. You guys get a ton of stuff on these free webinars, and that's why you guys always ask too. Oh, do you have a trial of your trade room? This is the trial of my trade room. This is exactly what I do in my trade room. It's just in my trade room you get a lot more. You get a lot more information, like the actual explanations for these and everything else. So. But all you need to know is I'm in the barf here. It's just a blind ATR retest failure of this volume event. So, all right, let's see. Since nothing's going on, if you guys got questions, fire them into YouTube. I will try to answer them. Is the new squawk still talking over me? I mean, I have it down to literally the lowest volume that I can possibly have it in. I don't know how you guys are hearing it. Please let me know in the room. I mean, in the YouTube channel. Anybody there? Bueller? Anybody watching me? Am I talking to myself as usual? I tend to talk to myself a lot. You're here. Thanks, Ryan. Appreciate that. So you're not, the squawk isn't like talking over me, the tick strike isn't too loud. Like I told you, you guys were saying it like 3 webinars ago, and I was like, sorry guys, I have to I have to hear what's going on. I didn't realize this YouTube software to broadcast, it picks up your internal volume. So even though I would have my speaker volume turned down, my manual speaker here, physical speaker, it was still picking up. I had my internal volume at like 80%. So it was, and I happened to like be scrolling YouTube and one of my webinars was on there and I clicked on it and I started listening. I'm like, oh my God, you can't even hear me talk. So you guys were right. I apologize. I was like kind of dismissive, but you were right. So anyway, that's down. I have it at like 10%, my internal volume. So if you're still hearing noise, there's something wrong. Like if this is drowning me out, please let me know, because then we got to figure out what the problem is. All right, let's see what else, if anything else fired off here today. Where's my other chart? So again, you want to have, as you can see, like I hear stuff, but I don't hear it. So you want to have your visual, the text chart, or not chart, but the alert as well, right? And all you do is you go over here and just go file alerts, and that'll pop up, right? So you can see the only stuff that's really going on here are these NASDAQ and S&P areas, and then we had some stuff in gold. Let's take a look at gold. Gold is a major pain in the ass most days, but you know, let's see if we're in an inflection zone. So let's look at the bigger picture here first. So you can see this isn't a zone, but it's kind of just hanging in here. So it's kind of struggling in this prior volume event. Let's just look what this is so you guys can continue to see why I draw these zones. So you can draw these zones. So I put these zones out every day in my trade room as well. So that's another benefit of this. This takes me like 45 minutes every morning, right? So if you go into my trade room, right, you go in here and you get every one of these charts with all the inflection zones. So then you just basically, I'll have a subscription service to this as well. It'll be pretty cheap for people that can't make my trade room, where if you want these zones, I'm trying to get it so we can automate it, where when I draw my zones, they populate on any chart, whatever chart that you're using, whatever software you're using. But anyway, you get access to this. I mean, this looks small, but then you can blow it up like this and you mark down your zones, right? And these zones are incredible. They're, you know, you can draw them yourself, but if you don't have the time, you just get mine. All right, so I have 17 different futures products that I post the zones for. Even cattle, lean hogs, soy meal, soy oil, all of them. So yeah, it's very doubtful you're trading many more than these, but if you are and you came in the room and you need something, then I'll put that up as well. Oh, so anyway, this market's obviously bullish, struggling at this zone. Let's see what this zone was from before. I have to go back a while. Yeah, so this was selling tail, market closed here, gap down. So this is still an important zone. This was directional conviction, selling tail. This is an important zone too. So that's why I have these drawn. You will be amazed how the market responds to these zones. Even when was this? This was a year ago, right? And you can see like this market's still respecting this zone from a year ago. It's still like struggling in this zone, right? So let's see the volume events that happen here.
So the US to sell $12 billion of reopened 10-year bonds on April the 19th. Apologies, that's 20-year bonds on April the 19th to settle on May the 1st. And the US to sell $48 billion in
so
6-month bills on April the 17th to April 20th.
Okay, yeah, so
and
if
the
you
US
want
to
to
sell
talk to me in the
$34 billion
Bookmap, I mean, you
of
could do it on
1-year
YouTube too, but in
bills
the
on
Discord,
April the
Bookmap
18th
Discord,
to
you
April
click
the
on this
20th.
channel here, this text channel. So here's obviously the visual channel, and then you got the text channel. So type in questions there if you got questions. And let me see if there's any questions in here. So this was gold. You had 157 stops. You had another 176. This I tell my room all the time. These are the worst traders on the planet as far as I'm concerned. It's just there's 85 stop runs a day in here. Just guys puking out positions. It's hysterical. But anyway, you had back-to-back stop runs here. So you can incorporate if you want. You know, this one I probably won't. But if you get like the market's here, stop run, and then market's here, stop run, you could make both of these volume events into one zone. You could do it for this one too, but you don't have to. This is where you have to have a little bit of subjectivity in your trading, right? It's like most of what I do is pretty black and white, but I mean, these are markets. So you gotta, you know, sometimes you gotta decide, okay, am I gonna merge these zones? Am I not gonna merge the zones? You know, not everything is like slap you in the face. Most of the stuff I do is slap you in the face. So that looks like it started there. Why are my sweeps not working on this? Hold on. Let's see what's going on here. Why is the sweeps indicator not on this? That's not cool. It should already be on here. Well, I don't see the other add-on. Where's it at? No, it's up here. That's why. Let's make this lower. Just helps you draw the zones better. See how the sweep, now you can see the sweeps in here. So I wouldn't start it right here. This is a good lesson too, how you draw your zones. So the stops a lot of times start the sweeps that trigger the stops, right? Because whoever swept this order book gets first right to the orders. And then the stops get second right. So the stops could actually be sitting here, but they don't trigger until here because whoever swept the order book gets first
Fitch
right to the
ratings
order.
say asset
So you want
quality
it,
of
that's
the
why you
US
want to draw
private
where the
credit
sweeps
lenders
start
is
because the
expected
stops
to
may have been up here.
deteriorate amid rising
But you can
rates
see
and
this
slower
blue
economic
bubble.
growth.
Well, that's not what this, and the price was already here once, so that's not what caused the sweeps to trigger the stop run. So that it was right there. And that may be confusing if you're new, but I go over this every day in my trade room.
So the US to sell $57 billion
Let's just
in
draw this.
3-month bills on April 17th to settle on April 20th.
I like to use yellow or white for my stop runs. I just want to know what the volume event was, right? Did I draw multiple zones here? Looks like I did. Alright, so let's see if that's right. Because this is the pain, right? You got to get off of edit mode and then you got to drag it back over. You can see this came all the way down to here, so I got to adjust the zone. There you go. So that's that latest stop run. Why do I have, what did I do here? Okay. Alright, so that's just hanging around that zone. We'll be back to that. I don't really like trading stop runs in gold because there's so many of them. I like when there's ice, like big icebergs. That's worth trading. Alright, so we missed absolutely nothing in here. We had a NASDAQ just sitting here, sitting here, sitting here. Alright, see if you guys got any questions. Never miss a Thursday with Scott. Thank you, Mike. Appreciate that. I would like to join your trading room. If I do the monthly subscription, will I have access to the Excel file? Yes. So everything I use, you members of my trade room have access to. So you get access to this. You get access. You show all the trading strategies, everything, right? There's a bunch of other stuff, and you know the charts, you know the inflection zone charts, everything. There's a ton of stuff that you get access to. It's definitely worth the money, guys. I'm not just saying that because it's me, but it's here. I'll even show you here just to prove it to you. That's just not me saying it. I think I showed this last week, but it feels good when people say stuff like this, right? That I'm not just you know, because I'm giving you guys a lot of knowledge. Like, you know, this is 25 years of me getting my head kicked in, and you guys get the fruits of it, right? So right here, I think I showed this last week. So she's one of the teacher's pets because she always puts the zero girl in there when I say the markets are going to zero. Actually, let's keep this up just so we can keep an eye of what's going on here. But just read this. I just want public share. I've been trading for 25 years. I have tried out many programs, rooms, studied so much. I could say what Scott Pulcini provides, and this room's valuable and worth the little fee. So it's like, yeah, it costs something to be in there, guys. Because listen, one of the benefits of being a trader is the freedom, right? Well, you know, I love trading. I love trading, obviously, but I love teaching, right? Don't get me wrong. But being a trader is like, you know what? Yeah, I don't want to trade today. I'm
NQ stocks stopped by NQ. 159 contracts.
So that's good. So now we can trail our stop based on this new event. But you know, with the trading room, I have responsibility. I got to be in there, and you know, so I charge for it. And you guys are getting my 25 years of experience trading. Like I said, you get the fruits of it. You don't have to get your head kicked in, like I did. Yeah, I had great moments, right? I made millions of dollars, like I said, but I've lost a lot of money too. Right, and I got knocked out of the game. So all of that is benefiting you, so you don't have to go through the same nonsense. You can just learn what to do, what not to do, and stay out and not get sucked into the nonsense. Right. So, and I've not. So actually, in 3 days is the 2-year anniversary of my trading room, and I have not raised the price once. So there. All right. So here's your newest volume event. So this is how I trail my stops. This is how you should trail your stops. You don't trail your stops like if you got long down or at 27.50 or whatever the hell it was. This is already coming back, so I better get this in so I can stop out of this trade. This might be another setup for us too, a short setup. Maybe I should stop talking and put the zone in. It's moving away quickly. All right, the zone is 13-140.75. Bottom of the zone is 38. ATR is. Now I'm using the 5-minute Wilders ATR on Thinkorswim. You can get it on pretty much any trading platform. All right, so if on this newest setup, if I were to be long off this newest setup, my stop would be at 1450. Right? When I'm already long, I'm going to trail my stop to 1450. Hopefully it's not already there. It's not already there, but I'm going to get that in right now. Hold on. And there might be a short entry here now too. So let's see. Let's see if this is, I think this might be Dada. So it's a delta divergence stop run at the red low. Actually, this might be a slug as well. It's definitely a slug. So let's go over this quickly. So a slug is a stop run, and that is Apex. This is this one. This is the most profitable one run so far. Apex 44. I'm trading it on that specific account. Stop run into a major lug. I shorted aggressively out of the zone. So I just drew the zone. Right? And you may get a barf here too. So I'm long, right? We already know I'm long. I've been talking about that the whole time. I've been long this entire webinar. If this touches 14, whatever price that was, I'll check here in a second, I'm out of my long. But now I can enter a short on the slug trading strategy, which is a completely different strategy, right? So, but the thing, what's the beauty of these strategies, you're never going to be long one and short the other, besides the ATR reversions, right? Because if this fails out of the zone and I get short, well, I'll be out of my long because of my rules, my ATR rules for my long. See what I'm saying? So I'm going to go short here, right over here, 1450. My stop goes at 64.25. I'm risking 50 points. I could put on 5 based on my risk tolerance. And this is just, I'm risking 10%. Do not risk 10% if you're trading normal size, like I talked, or normal real money. What did I say? That was 1450. So let's put that in. Make sure I get the right trading account. Of course, I put the wrong one on this one. I was supposed to put in barf earlier, and I put on, I made a mistake there, shockingly. And guys, and this is part of the reason I'm doing the Apex accounts, because being on these webinars, being on one screen, I make so many mistakes. I'd rather risk someone else's money than my own money, because I make so many damn mistakes doing these webinars. That's another thing you guys get that I'm sacrificing for the team. All right, so I will short at 1450. The problem is hold on, let me put this barf back on. I put the barf on the wrong Apex account is what I'm saying. I actually put it on mine because one of these accounts is live. I meant to put it on 52. I put it on the wrong one. All right, so I put that back on. I'm going to stop out at 1475. I'll go, if you're confused, I'll go over all this there in a second. Or 1450, not 1475. All right, so let me make sure the slug is working. All right, so I got slug working. All right, so it's slug. Nothing's going on in ES, by the way. So what's the slug again? It's a stop run, which usually is not real buying. It's guys puking into the very important Ludwig level that we talked about at length, right? So this is a specific strategy. The minute I see a stop run at the Ludwig level, the minute it breaks below there, I don't even wait for a retest on this trade, I get in short. This is also the Dada. What's the Dada? Dada is a stop run at extreme standard deviation. So this is VWAP. This is 1 standard deviation called daily value area. This is 1.5. So 1.5 or more standard deviations, I will, if there's a stop run with a diverging delta, I will go short. So I can put that short on as well. That's an aggressive entry also. I don't have that, I don't have the descriptions of all these and whether they're aggressive. This is all part of my trade room, like I said. But this is the Dada. Dumb and Dumber, which is a stop run that fails with aggressive opposite delta at extreme standard deviation. And what I like to see as well is, this is another part of my, what we look at the trade room. This is algo guy. I like to see extension of algo guy, meaning the market's pulled away. These are exponential moving averages that we look at for other, there's another trade strategy based on this stuff. This is the short term. I get it. Just Google exponential moving average. You can learn all about it. This is the longer term. You can see the stop run happen extended away from here, so that factors in play. So that's one of the factors of the playbook. So I could put on Dada and slug shorts if this thing comes back, and I may even be able to put on a barf short. I'm still long the first barf, right? But if this does this, I'm short barf. And at any point, if it just comes down and trades 1450, I'm going to be short dada, and slug. You guys following? So let's see. Let me put on. Dada is number 41. That's working. Slug is number 44. Just to show you what I'm doing here, guys. Like, and I'm not showing actual clicking of trades, but you can definitely see this, right? So what I do is I go over here on my Apex accounts. You see all these different ones? These are all the different trading strategies. Here's the one live one that I actually put the wrong trade on because that's what I do. I just make mistakes. So 44 and 41, I'm entering aggressively. So here's number 41 or 44. I didn't put that one in yet. Hold on. Why is this not scrolling? This book or this YouTube stuff really messes up my computer. All right, so that's working, right? And then 41 is also working. These are both aggressive entries, right? So I got those working. And that's all just straight from the spreadsheet, right? So I'm about to get filled. I'm about to get stopped out of my long, which is basically going to be a small loser. Make sure I put that stop in too. Yeah. And then I will turn around and go short based on a volume event, right? So you can imagine, and I'm sure some of you are right here, you're confused as crap at looking at a bar chart. Like, what do I do here? Do I go long? Do I go short? I don't know. This is showing me, even if you have these zones, like, well, this could be resistance, but it looks like they're buying it. Tick strike keeps going. I don't know what to do. Well, the volume events tell you what to do. If you have rules for these volume events, which I do, I know what to do. So when I see this, I have my rules, I put it on, and this is the edge. And I put them on, I put them on, I put them on, I put them on. After, hundreds of them, if you have an edge of anything, you will make money. But you got to be consistent. So you see, I'm not even hesitating, right? It's not that I was long. So this is a perfect example of the risk reward thing I was saying earlier about I go 3 to 1. Okay, so you're long here and you're getting 3 to 1. You're looking at Bookmap and you see an opposing volume event that is a bearish event. You're just gonna hold your long because you won 3 to 1 and let it come back and stop you out because you didn't get your 3 to 1 yet? That makes no sense. I will get out of this trade. Say this was even higher when it was only 1 to 1 on my profit, and then I get an opposing volume event. I'm out. I don't care if I didn't get my 3 to 1. I'm not going to ignore something that is the most important thing in the market because I want 3 to 1 on my trade. So you see what I'm getting at there? So anyway, if this gets down to 1450, this is a bearish event, and I'm going to trade it as such. So if you guys don't understand what I'm doing there, put that in the YouTube questions. And now I'm just sitting here and wait. So I'm still long. Yeah, this is a sweet market today, by the way. It's great. What are we setting? A 2-point range for an hour? Still long ES. I'm still long NASDAQ. Haven't been stopped out yet. And this still could potentially be a bullish setup because I don't determine whether it's bullish or bearish until it can push an ATR away from there. And that's what that is in the spreadsheet. This gives you the
now on the next rate move. And says the choice for the May meetings is either 25 basis points or 50 basis points.
So actually, this might be in a bearish setup right now, 1750. I enter at just outside of an ATR. That's why the entry price is different than the ATR.
Probably marginal.
If this got down to 1750, this is an
could
official
lead to smaller May
bearish
hike.
setup. Hey,
It says rates must rise further as banking fears ease.
This is a bearish setup. What does that mean? I'm not short yet. A couple more points I will be. But now, if this does this, I can go short barf. So I might be short barf before I even get short on the other ones. See what I'm saying? So now I wait either that or I'm going to be short aggressively, meaning the first move out of here, I'm short aggressively on those 2 other trading strategies. So I potentially can have 3 strategies on here. If this rips up to this zone one more time, plays its algo games, comes back, and then I'll be short barf, I'll be short slug, and I'll be short dad. And I can tell you, when I've had 3 or more on at one time, I haven't had a loser on it yet since I've been keeping track of these. So that'll be interesting. Hopefully I didn't jinx it, and I'm sure I did. But Sue, great stuff. Really learning a lot. Awesome. That's the whole point of these webinars. I want you guys to learn and be able to fight the man. I mean, there's a lot of people are like, so back to my being a trader, the freedom, and I do have commitments to the trade room, so I can't just take off or whatever. But one, I like teaching. Two, it helps keep me grounded, right? Like, it helps me not just be a complete asshole most times, pardon my language, and go on tilt and stuff, because I do make a fool. I complain all the time in my room, and that's just my way. I've been talking about this a lot. It's my way of getting it off my chest, right? You've got to have your own ways. You can't just act like things don't bother you if they're bothering you. You have to. Any real trading psychologist will tell you. You have to have emotions. You just can't let emotions affect your trading, right? So the way I get mine out is I just bitch the entire time, right? And I do it whether I'm on my webinars or not. I just talk it out, and I don't do anything differently in my trading. It doesn't affect what I'm doing in my trading, but it gets it off my chest, so I'm not like bottling things up and then end up breaking all my screens or something. See what I'm saying? So anyway, I do like teaching, and it helps me, keeps me grounded. But my biggest thing, guys, is, and people don't believe me, I'm filled on my NASDAQ, by the way. Shorts, two different shorts, and I'm out of my long. People don't believe me, but I literally take joy into teaching you guys to compete with the man, right? Why? Because I was about to use a very bad word there, these entities are what knocked me out of the game, right? When I was making millions of dollars, that was a very fun time of my life. You ever hear the saying, never having money at all is a lot worse than having money and then losing it, right? Because when you never have it to begin with, you don't know what you're missing. When you have it and you lose it, it's 1,000 times more painful. So these entities are what knocked me out of my game and my being a millionaire, right? I have a vendetta, and I take great pride in showing you guys how to compete with these. I'd say it to the day I die. These markets are the most manipulative thing you can ever have. It's complete manipulation. It's manipulation because they have the size to push the market around and whipsaw you to death, right? But if you can see what they're doing, if you can't beat them, join them. So you see what I'm saying? So I take great joy in showing you guys how to understand what these guys. What do you think this is? These guys are trying to take your money. That's why. Why do you think, this is my opinion only, right? I'm pretty sure I'm right, but this is my opinion. Why do you think the CME gave this information to the general public? Why do you think that is? Well, because there was a point about mid 2000, I say 14 to 17, retail trader was like a dinosaur because no one could make money because they were getting crushed. And it was just literally the big money was shark eats shark. So it was algo versus algo. They didn't have any fresh meat, meaning us, retail trader, right? So then all of a sudden, wow, let's give them a little more transparency and see if we get some retail traders in here. Again, this is just my opinion. And, this is giving us a fighting chance. So the point is, yes, they still manipulate. Look at this market. You don't think it looks like a Christmas tree. These are algos, right? But at least you can see what's going on now to give us a fighting chance, the retail trader fighting chance. And I take great pride in giving you guys the info to understand what these fine gentlemen are doing. I was about to use another swear word there. So that's why I do it. You can believe it, not believe it. I don't really care, but that's why I do what I do, and that's why I teach. All right, a lot of ranting there. You guys got any questions, throw them in. I'm getting close. We got about 10 minutes left, and I got to hop off for the other YouTube traders. I hate this fake rig market. Right, but I mean, again, if you can see what they're doing, then that's great. So anyway, I'm short. Well, still long, yes. I am short NASDAQ. Actually, I didn't put the BARF on. Oh, no, because we never retested the zone. So this still hasn't retested for the BARF, which it probably will because that's what it does, right? Look at the algos. They like to take your money. So every person that puts on a trade that can't handle it, they get short. Like right now, if you jumped in that share, like, oh my God, this is wrong. I got to get out. This is what they do to you. They know how traders react. Place your stop. I'm going to show you the price away from the volume event. Force this market to get through the volume event, more than an ATR outside the volume event. Then you say you're wrong. Big deal. You stop out of a trade, on to the next one, on to the next one, on to the next one. That's the edge. Trading is probabilities, guys. That's all I tell you. That's because it's the truth, right? And this is all Mark Douglas talks about in his book. This is, again, directly out of Trading in the Zone, right? We'll go over this here in a second. Let me get my stops in for this first. So if you are short the NASDAQ there, NQ, just make sure this was right when I got filled. It's a little lower, 19.51. Once I get filled, I don't change this, meaning I don't say this contracts down to 15. My stop right now on these shorts is at 63.25. Well, say this went down to 12. Watch how this changes, right?
Nat gas
Goes
ice
down to
iceberg by
54.50.
NG.
I don't move it.
159 contracts.
I don't move it as this contracts. I've learned the hard way. I just, wherever I get filled at, whatever it is when I get filled, that's what I leave it at, right? Up until I get filled. Up until I get filled, I do change it, right? Because it changes my entry price and everything else. 63.25. I'm going to stop out of that. What is this? Oh, I stopped out of the long.
Nat gas ice iceberg by NG. 168 contracts.
All right, so 63.25 is my stop for Dada and Barf. Dada and Slug. All right, so those are working. Still on Sweetie, yes. Awesome trade. Not. So now we just let these work, right? So back to my probability rant. And if you do come in my trade room, there's a prerequisite that you get this tattooed to your forehead, like a real tattoo, like a Mike Tyson tattoo, or you could put it on your cheek if you want. So you look, no, not this. You could do this too. I meant this. You should have this on your trading. You should have it on your forehead or your cheek. But if not, I'll even let you put it on your thigh if you want. Just send me a picture of this on your thigh, this trading document. If not, you need to have a copy of it. That's a joke, by the way, for those of you guys that just don't catch jokes, because I guess you can't joke in today's environment. You need to have this printed out on your desk and read it every single morning. Let's go through it quickly. I objectively identify my edges. What are my edges? SI indicator volume setups. The best edge I've ever seen in trading. I redefine my risk of every trade, just outside of an ATR for both entries and stops. That's my risk. We've gone over that. That's in the spreadsheet. I completely accept the risk, or I'm willing to let go of the trade, right? So you get stopped out. I'm out. I'm waiting for my next trade. Trading the correct size and to risk 1.5–2% of your account size. That's real money. If you're trading Apex, you want to be more aggressive. There's my room moderator disagrees with that because he said it breeds bad habits. Yes, if you're an experienced trader, you can trade bigger and you're not going to be a moron, once you get a real account. But yeah, it's going to take you longer to qualify too if you're trading that. But if you're doing the tryouts, you can risk more. Just don't let it breed into your regular trading. Once you get funded, you don't want to be trading more than 2%, or if you're trading your real account size, because you're going to have a bad day and you're going to blow out your account. It's 100%. I act on my edges without reservation or hesitation. So you see, like, I was long there. Did I say to myself, did I have any conflicting emotions? Well, yeah, I got long and I'm on this webinar and I don't want to look like I'm flipping and flopping. So I'm just going to ignore that stop run setup and I'm just going to hold this long. No, I got a short setup. If it failed, I stopped out of my short or stopped out of my long. Now I'm short, right? I act on them without reservation. And until you can do that, you're not going to be a winning trader. Hold on. I pay myself. We went over this as the market makes money. So these are all areas that I will pay myself, especially if they're confluent, meaning there's one or more in an area. I will get out of like a third of my trade, half of what I am on, whatever, depending on. This is a little more subjective, like as far as what you're going to get out of. So that's what, when people come in my room too, they look at the spreadsheet and they're like, well, I don't understand. On the ATR trades, there's an exit price. Well, why is there no exit price? And he actually has this. Jay Labrada just put a bunch of other stuff in here. But it used to say exit is subjective or custom. It would say custom. I don't see it on here anymore. But because it is custom, because the position trades, it's more subjective where what you deem important in your trading, like when it gets to those areas, right? So, like this is an important area. If I was long, I would definitely be. So say I was long from down way lower, down here, right, and the market moved up into here, I would definitely be out of half. I would have been out of all of them actually because of the red lug. But say it was just market profile composite high and extreme standard deviation, well, I get out of half there. See what I'm saying? So that's stuff that you got to learn as a trader, but you can still use my areas to figure out and get out of some. I continually monitor my susceptibility for making errors, tired, irritable, overconfident, subpar trading days. These are mine, right? using different time frames. So how many of you guys do this? Like you get in a trade, a shorter term trade, say you're trading off the 5-minute chart, whatever you're trading off of. I'm not saying it's wrong or right. I have my own thing. But say you're trading off of this chart. This is actually a great example. So this looks bullish, right? You got balance, broke out, building balance. If it breaks out of that, that's bullish on a daily or intraday chart, 5-minute chart. But then you're like, well, yeah, I want to go long, but I'm not going to go long because you have this important inflection zone right there. So, and then you're torn, and then you don't know what to do, and then you sit here, then you watch the market rip, and you're like, why didn't I go long? So I don't let different time frames affect my trading. See what I'm saying? And so many of you do. And then I understand the absolute necessity of these principles, the consistent success, and therefore I never violate them. You need to create the experience of trading mechanically and respecting your rules. And then this is where this comes in. Trade edge like a casino. This is right from Trading in the Zone, guys. I've added a couple of my own things, but this is right from Trading. Get the book. So you find an edge that generally puts the odds of success in your favor. That's the SI indicator events. You can think about trading in an appropriate manner. The 5 fundamental truths right here. And then you can do everything you need to do in a series of trades. 5 truths. Anything can happen. I got stopped out of 2 different ES trades, one long, one short yesterday on Fed tape bombs. They said, or one was the Fed, one was ECB. The Fed guy said something, market ripped him, stopped me out. Then ECB later on in the day, I was long, awesome long, it was working in my favor. He comes out and says, we may raise rates. The market sold off 25 points straight, right? This is part of trading. You've got to realize this is why you have stops in. You don't just put in trades and hope it goes your way and don't put stops in. You don't need to know what's going to happen next in order to make money. I have no idea what's going to happen next. I know what volume events, what the probability of the volume events working are, and I put the trades on. There's a random distribution. This is so important between wins and losses for any given set. You're going to have losses. Stop out, on to the next one. Stop out, on to the next one if you have an edge. If you don't have an edge, a discernible edge that you know is an edge, then this is not relevant. But if you're just trading volume events, even if you just trade the barth, that's an edge. You're going to have losses. You're going to have more winners and losses over a series of trades. And that's just nothing more than an indication of a higher probability. Does it mean it's 100%? Am I 100% these shorts are going to work in NQ and the long is going to work? No. It's a probability based on the way the market reacted to this area, right? And here, we're about to get the first retest of this area, so I could put a barf short on 2-pot. But I have no idea, and neither do you, neither does anybody else, right? And then every moment in the market is unique. So there you go. There's my Trading in the Zone rant. Tattoo it to your forehead. Until you can internalize that and believe it, you're never going to be a consistent, profitable trader. And that leads me right into the end of this webinar. And let me just quickly see if there's any questions, and then I'm going to hop off. I just curse at the screen and then calm myself down. Right? You got to get it out. Absolutely. Some people handle it differently, right? You definitely don't want to be breaking screens like I did in my younger days when I was very, very immature. But my solution now is I just bitch the entire time. You're the best, Scott. Really appreciate the time you put in your webinars. Thank you, Mike. I hate this fake rig market. Again, guys, I watched somebody posted it. Actually, this
Crude
is
stops LCL 293 contracts.
Find it real quick for you guys. Somebody posted. I don't know if you guys have ever seen that documentary. So I worked at the Board of Trade for 4 years, so I know these guys very well. Like, I don't know them personally, but I know the personalities. Let me see if I can find it. Jay Labrada, if you're on here, post that video again of the documentary. I can't remember. Oh, what's it called? I can't remember the name of it now. If any of you have it, post it in the trade room, please. You guys definitely want to watch this. But I want to show what my point of that is to that comment is these rigged markets can't make money. It's all algos. These guys, all from the Board of Trade, were all there's just no way you can compete with these computers. That's why I want you to watch it. It's actually really good for the characters because this is exactly how the Board of Trade was. I can't find it. Could somebody post it, please, in the trade room that has it? What is it called? I can't remember what it's called now. If you guys know the name, I'll put it in. Hold on. Give me a second. But the point is, guys, these are algo. It's algo city. Yes, it's manipulated.
4.03%.
See what they're doing.
4.03%.
We have rules for what they're doing. You can make money if you follow your rules and understand how the market reacts to these events.
The US sells.
Right? So you can bitch all day long that it's rigged. It is rigged. but you get to see what they're doing. Nobody from my room can tell me the name of that documentary that he put in. Jay Labrada put in last week. Here, give me 1 second.
So the US sells $61 billion of 4-week bills
Thanks
and
everybody.
awards
I'm doing
29.45%
myself.
of bids at high.
Hold on. Here you go. So watch this. It's actually really good, and this is exactly how I was down there, guys. I'm telling you, I was down there for 4 years. The one guy talking, John Tubbs, he was down when I was down there. He was the big local, but the rest of these guys, I think, are at the CME. But you're going to hear them all like, oh, this is over. My life's over. I can't make money. This is all fixed. The fixed part is correct, but let me see. Why can't I type in this chat room here? Why can't I? So just Google Florida. I can't type in the chat. I don't understand what's going on here. Very strange. It says subscribers only mode. Am I not a subscriber? Hold on. Let's see if this works. Here we go. All right. Here you go. Watch that. It'll make you feel a lot. Let me know if you guys can see it. I don't know if you can see it or not. If not, just Google Floored, and it's a YouTube documentary. You can watch it. All right, so bottom line is the markets are absolutely terrible right now. I'm short. It still hasn't retested this zone. I fully expect one of those at least, but this could just keep going. I'm short aggressively, 2 different strategies. I'll go short BARF 2. I'm still long ES. So yes, I have opposing positions on, but that's what the volume setups tell me to do, right? So that's what I do. I have my rules. All right, guys. I do this every day in my trade room, twice a day, as long as the market's not crappy. Some of the PM webinars I bow out of because it's not worth it. I'm not going to risk my money or my mental. You can go down the rabbit hole of a bad streak very quickly, and you start trading in these bad markets. Then you're all despondent because you're getting killed, and then when it finally picks up, you're in a slump and you don't take advantage of it. So market's crazy or crappy, go play golf, go do something else, go work out. All right, that's about it. You guys got questions? You got my email. I don't know if I showed you that. It's just scott@scottpulcinitrader.com, or you can join my trade room. And everything's on my website. Just go here. Everything's all right here. Trade room. Down here, different plans. You get discounts to my courses. The courses are here, and they're on the Bookmap marketplace too. This is my main one and there'll be a new one out soon. All right, guys. Have a good weekend, and I'll see you next Thursday.